everybody. I am JC Peretz, founder of AllStarCharts.com, and I am joined once again by my esteemed colleague, Mr. Sean McLaughlin. Let's give him a round of applause. What's up, Shawnee, baby?
What's happening, man? Market's getting a little slippery out there, huh?
Little spicy, little spicy. So we had our meeting this morning, all the analysts getting together. You got this nasty failed breakout in the small caps, volatility spikes. Sean likes selling iron condors, collecting that cash.
Well, I mean, look at this chart that you got up here that we could throw up here on the Russell 2000, the IWM. This is a chart we've been watching all summer long. We've been looking at that range. In fact, we've played that range a couple of times throughout this year profitably. And I don't know about you, JC, but I got pretty excited when we broke out there in early November. I thought that was a harbinger of things to come. I thought that was the signal the market needed, and we were going to blast off Santa Claus rally style all the way into the end of the year. Well, the market doesn't care what Sean thinks, and as you can see, it's turned into a big, ugly, failed breakout. But where has it landed us? Right back in the box, right back in the middle of that range. And with that sell-off that we're seeing right now, we're seeing elevated VIX, right? The volatility index is at the highest levels it's been all year. And so, JC, you know me, I'm an options guy. When I see an index stuck in a range and I see juicy premiums, my first instinct is, man, we got to sell some premium here. We got to do a delta neutral style trade here. We got to collect some premium. So that was our thinking this morning. And you know, look, is IWM going to stay in this range? I don't know. I mean, it could easily, we could easily see a bigger sell-off below 210. That could happen. And certainly options markets are pricing in that fear, that risk that it could happen. But hey, we're putting on a trade here. We're putting on an iron condor, which has defined risk for precisely that reason that, hey, we don't know if there's a bottom yet to be found in this sell-off. So we want to define our risks so that, you know, if the shit hits the fan, we're going to be okay, right? We could manage it. So
Right, but the bet we're making here is that shit may hit the fan. That might happen, but we'll have already made our profits by the time that happens, right? If volatility were to contract. One of the things that, you know, I'd like to reiterate to people is that price trends, right? If something's going higher, there's a higher likelihood it's going to continue. So mean reverting strategies tend to fail. So if you're using a mean reverting strategy, you better be sure, right? You better have a lot of evidence that says that, because there's a higher likelihood for markets to trend because prices trend. Volatility, on the other hand, contracts, right? It is a mean reverting in nature. So that's really what we're looking for here. And I want to add one more thing to that. I'm looking at a 14-day RSI. This is momentum. This is the momentum indicator that we use. Getting oversold for the first time in some time. So reiterating the mess, because if this was a super healthy market and a super healthy index, we would not be seeing oversold conditions. Those are characteristics of downtrends and messy markets. To add to Sean's point of just a mess and us betting the mess is going to continue, I think momentum is just adding to that.
right. So this is the structure of the trade we put on here. You could see as long as we stay within 210 on the downside and 235 on the upside, we're going to have an opportunity to win in this trade. And look, JC, I put the trade on for $1.70. You could probably collect a little bit more for it right now because the market is down from where I put the trade on. But we're not. The goal here is not to collect that full 170 and book that profit. We're not going to hold this trade all the way until expiration. That's not my intention. My intention is to really just take the cream off the top. If the market finds a bottom sometime soon in the next few days without going too much further from here, you're going to see the premiums, you know, fizzle out like a balloon just deflating.
Evaporate, like Fugazi.
Right. And so my goal here is to buy this entire spread back for around 80 cents. That's the price target I'm looking for. If I could buy it back for 80 cents, then I've captured a little bit more than 50% of the maximum potential gain in this trade without having to hold it all the way till the end of the year. That's my goal in the profit. Now, as far as the risk management goes, look, our reason for being in this trade is because we think IWM is going to stay in this range. If IWM proves us wrong and breaks below our short put strike of 210 or
Let's
rips
go.
the
Let's
other
go over the
side,
trade. Let's go over the trade quickly, just to be clear what exactly we're doing. We're shorting the 210 puts, and we're also shorting the 235 calls. Just to be clear, shorting the 210 puts, 235 calls. These are the December 31. It's a weekly expiration. December 31 on IWM, which is the small cap ETF. Shorting the 210 puts, shorting the 235 calls.
right? And we're protecting him with a long put and a long call, $5 away on each side. So the max we can lose in this trade is 330. The max we can gain is $1.70. Now, going back to what I was saying about the reason we're in this trade is we're in this trade because we believe that IWM is going to stay within 210 and 235 over the next few weeks. If IWM proves us to be wrong and we see a close below our short strike at 210 or above our short call strike at 235, that tells me that we're wrong, and I'm going to close the trade down, win or lose. It'll likely be a loss. It'll be a small, manageable loss. But that's my signal to get out because our thesis is wrong. I'm not going to fight it. I'm not going to wrestle with it. I know there's a whole cottage industry of iron condor traders out there that like to do adjustments and like to move the strikes around. That's fine if you want to do that. But for me, I'm only in this trade for one reason, because I believe it's going to stay in a range. And if it's outside of the range, I'm not going to wrestle with it. We'll close it down.
I like how simple the risk management is here, right? If it's within the bands, you're in. If you're out of the bands, you're out. I mean, it's just very, very simple risk management. I got a question for you. Why not selling strangles?
So you totally could sell a strangle here. You could sell the same strikes, the 235 call on the upside and the 210 on the put side. The reason why I didn't do it, a couple of reasons. Number one, I'm not so comfortable with undefined risk right now. You know, you and I don't follow the news. We don't really care about the news or the story. But the fact of the matter is, we could be one headline away from a crazy move in the market. I'm not saying that's going to happen, but I don't want to expose myself to that risk if I don't need to. So I don't want to do that for that reason. Also, because of the price of this index, it's, you know, trading around 215 or whatever. The margin required to hold a naked strangle would be significant. And, you know, I like to be efficient with my capital. And so putting on the iron condor only requires $500 of margin per one lot, as opposed to, I don't know, 10 grand per one lot if I was doing it naked. So that's why I didn't do a strangle. But there's nothing wrong with a strangle here, JC. If people are comfortable with strangles, that's also a good trade. I would be a little bit more aggressive on taking the
risk
profit.
management, because listen, it always comes back to that. How are we going to sleep better at night, right? That's the idea. You can do that, but you're going to sleep better at night if you do it like this, right? I love that mentality just in general. You saw a little alley-oop there that I served you?
I like that. Well done, my friend.
All right, so just to be clear, selling an IWM December 31st weekly expiration, iron condor. I hope it works out. Listen, the risk management is easy. You know, this is one of those opportunities when the VIX spikes, there's kind of cash laying on the sidewalks, and you can either go over there and pick it up or not. And with this trade, we are choosing to go pick it up. How do you feel about that?
I like that you're channeling a little Jimmy Rogers there with that cash on the sidewalk analogy. Well done.
You like that? Should I wear a bow tie next time? No. No. All right, guys, I'm JC Peretz. Thank you, Mr. Sean McLaughlin. Shoot us an email. Let us know what you think.
Take care, everybody.
Adios.